Hello everyone, I'm Jerry D'Ambrosio, Manager of Educational Content here at VectorVest. So welcome to today's session, How to Trade with Momentum, a Moving Average Approach. We're going to focus on a simple but powerful strategy that uses exponential moving averages, or EMAs, to help us time our trades with greater precision. Whether you're new to trading or a seasoned investor, this method can add clarity to your decisions, reduce emotional trading, and improve consistency. Here's what we'll cover today. We'll start with the concept behind the 5-8-13 EMA squeeze, what it looks like and how it works. Then we'll talk about how we combine that squeeze with VectorVest RT, or Relative Timing Indicator, to reduce false signals and identify real momentum shifts. And finally, we'll break down the buy and sell rules you can follow to apply this strategy on your own stocks or to find new ones. Let's begin with the essence of the strategy, timing. Not market timing, but timing on the instrument that you're using. Now you can apply this technique to ETFs as well as stocks. As far as market timing goes, as long as we're saying that it's okay to buy stocks, you can use this strategy. The beauty of this method is that it gives you an early buy signal at the beginning of a new trend when price, momentum, and institutional interest are all starting to align. And just as importantly, it gives you a timely sell signal when that momentum starts to fade. This isn't about calling tops and bottoms. It's about catching the meat of the move and protecting your gains before things reverse. Here's the core setup. It's called the EMA Squeeze Swing Trading Strategy, and what we're looking for is a pullback or consolidation followed by all three EMAs starting to rise and squeeze together and converge tightly. This is the squeeze, okay? When the EMAs begin to pull apart and they're sloping upward, 5 above the 8, 8 above the 13, that's our signal that the trend is gaining strength. But we don't stop there. We want confirmation. This is where RT comes into play. A rising RT, relative timing, especially one that's making higher lows, tells us that momentum is building. That reduces the risk of a false breakout. And finally, we overlay the 50-day simple moving average. That's the pink line here. So if price is above the 50-day moving average, we know we're on the right side of institutional support, and that gives us more confidence in the move. Okay, so let's go into the VectorVest program and take a look at some real-life situations, real-life trades. So as far as market timing goes, remember, if we're saying that it's okay to buy stocks, you can use this type of technique. You can really use any type of strategy or technique. But as of right now, the close of June 26th, we are saying that it's okay to buy. We have 3 green lights in the color guard. Color guard is bullish. Nice day on Thursday, the 26th. All the major indices rose nicely. Primary wave is up. Underlying trend is up. We're in a confirmed up. Only noteworthy condition here that we'd have to pay attention to is the MTI is above that 1.5 level. We say that downside risk outweighs upside potential. Not that there isn't any upside potential, but if we're trying to balance that risk-reward profile, right, with every investment that we take, it's got to be a big part of our decision making. MTI is above 1.5. We have to take note of that and be a little bit more careful, a little bit more cautious, right? The time to buy stocks is when the MTI is rising from a lower level, from below 0.6 to above 0.6, from below 1 to above 1. Maybe a little long in the tooth here, but we're going to continue to play the market to the upside. There's one method of stock selection that I like. If I go into viewers, go into the S&P 500 watch list folder, click on S&P 500. This is a list, of course, of all the stocks in the S&P, sorted and ranked by our VST indicator. This is a nice list of stocks, right? We're all familiar with these companies. But the power of the VectorVest ranking system brings the best stocks to the top of the list. So I don't have to worry about any stocks other than the ones at the top to start. These are the stocks I'm going to favor. So when you're deploying any type of strategy, moving average strategy, anything, you always want to favor the stocks at the top of the list, especially if you're looking at a watch list, even if you're looking at a search, because the search sorts the list specifically. So I'm going to click on Graph All here. We're going to take a look at the charts. And what we'll be looking for as of today, or yesterday, June 26th, I am recording this before the market opens on Friday. We are looking for, as of the hard right edge, that situation that we just saw in those two little charts, where the moving averages, the 3 EMAs, and I have everything we need on the chart. I got the 5-day EMA in yellow, the 8-day EMA in red, the blue is the 13-day EMA, volume at the bottom, RT below that. As of the hard right edge, do we see a squeeze of the 3 EMAs and a release? I would say no, and I know what you're thinking, maybe this is the squeeze. It's not technically the squeeze. It's a convergence of those 3 moving averages, or really the 2, the 5 and the 8. The 5 and the 8 are sitting above the 13. That's not technically a squeeze. No squeezes occurred here either, because you have upsloping moving averages, 5's above the 8, 8's above the 13. Now, if we look back to here at the end of April, that was the squeeze. That is what you would consider the squeeze. I'm going to quickly, again, go back to my charts here, and this is what we were looking at, right? Downsloping 5, downsloping 8, downsloping 13. Price is falling. In this case, it was falling below the 50-day moving average. Price begins to rise and approach the 50. The moving average is squeezed. As price continues to move towards the 50 and above the 50, that's when you got the separation of those 3 EMAs. So isn't that the same situation that we see here? RT is rising. Volume's coming in pretty nicely. Look how I've toggled price off, right? I don't need price on for now. It's the direction, it's the situation of the EMAs here that's most important. There's the squeeze of the 3. Here is when momentum began to build. RT hitting higher highs and higher lows. Not yet above 1, but that's okay. It's trending higher. All I need now in this situation is for price to close above the 50-day moving average. Now I'll toggle price back on. I could see that it closed above the 50-day there on May 2nd. Truly didn't get followed through on May 7th, but that's when you would have taken and bought NVIDIA based on this system. Right as it crossed above the 50, remember, that's institutional support. Institutions begin to participate again and really kind of go in heavy when price crosses above the 50-day moving average. So if you bought at roughly 114 maybe, 115, when would you have exited? Let's review the exit criteria. The exit criteria is simple. You stay in the trade as long as the 5-day EMA stays above both the 8 and the 13. Meaning if they cross, you exit. If the 5 closes below the 8 and below the 13, that is an indication that the trend has broken down. We want to catch the meat of the move. We're getting in rather early. Again, we're not calling the bottom, but once momentum starts to build from the bottom, we are taking advantage of that and entering the position. And once momentum begins to break down truly, we will take our profit or cut our losses, however it works out to be. But we are exiting the trade. This is a very rules-based, unemotional strategy. You would have taken it there on May 7th at about 115, and you'd still be in it today because the 5-day EMA never closed below the 8 and the 13. There were times where it converged, where the 5 converged towards the 8, a little bit here, a little bit recently. Now, in the past, you may have gotten bounced out during this period of consolidation here. And I wouldn't have blamed you, of course, right? You take the trade here. You want to take profits when you start to see a little bit of a breakdown. In the past, you might have closed that position. Again, at a gain, that's okay. But this system allowed us to stay in the entire time. When I use this and I'm managing the position, I take price off. because it's the three EMAs that are the determining factor in if I'm going to close it or not. So this was a really nice entry on NVIDIA early, and even a few of the pullbacks here, or even this quiet period where you got bored, I don't know, and said, I want to take my profits off the table. Again, I wouldn't have blamed you. But if you want to that's emotional a little bit, but if you want to follow a rules-based system, this is a really good one. It takes that out of the equation there. You're just following the rules and keeping in the trade, staying in the trade as long as the moving averages remain above each other. All right, let's look at the next one, AVGO. Remember, we're first looking at the hard right edge because we're trying to find a stock today that might meet the criteria. It doesn't. AVGO does not. We're seeing the fanning of the three. I wouldn't have called that necessarily a squeeze either, because the 5-day EMA is above the 13 quite a bit. Here was the squeeze. When they're sitting right on top of each other, there is the squeeze. And they are right in this area here. Very similar to NVIDIA. We might see a very similar situation. There was the separation of the three EMAs. There was the relative timing indicator rising. We need price to have closed above the 50. It did there. There was your follow through. Moving averages are continuing to fan apart. It's a good sign that the trend is building. When would you have exited this one? You would not have. You would have stayed in the trade the entire time. There was this period here where it was close, but the trend truly didn't break down. It was more consolidation than anything else. So you would have stayed in this one this entire time. All right, let's look at the next one. NRG, a little bit more volatile. Let's take a look. So right now, actually, this is a squeeze for sure. They're sitting right on top of each other for an extended period of time. Are we starting to see the fanning out? We are, just slightly. The 5's above the 8, the 8's above the 13. The release has begun. Nice day on Thursday, nice day yesterday. Haven't quite broken out of this consolidation period yet. RT is rising. 50-day moving average in this case is upsloping. Remember, the ones that we've looked at before, NVIDIA, AVGO, are examples of when price first crosses above the 50-day moving average. It's been below the 50 for a while. No real need to participate and buy the stock yet. You wait for the price to cross above the 50, and that's the initial entry. There will be times along the way where squeezes occur above the 50, and this is the one, right? So here, let me take price off. Right, moving averages began to separate, trend began to strengthen. Here's when it broke down, and really here's where it truly, the 5 closed below the 8 and the 13. And then the trend really weakened, right? The uptrend weakened. We weren't in a bona fide downtrend yet, but there is the squeeze and now release, so you can kind of consider this as a resumption, second leg potentially of this move. First leg, of course, being when price first crossed above the 50. So you actually have a potential NRG EMA squeeze set up today. Now, we went through 3 stocks. Took us a little bit just to find one. We'll look at the next one. AMD, no, right? No prior squeeze here as of the current time period. I wouldn't have called that a squeeze either. I wouldn't have called that a squeeze either. We know what the squeeze looks like. It looks like that, where price is sitting right, the moving averages are sitting right on top of each other. There's the separation. There was your initial entry into AMD, probably right there. There was the day price closed above the 50. There was your true confirmation on May 7th. RT had just crossed above 1 at that time as well, hitting higher highs and higher lows. So we have all things in our favor here. During this period here, again, you might have gotten shaken out. You might have closed the position in the past. This system kept us in the entire time and is, obviously keeping us in currently. There's STX. So we're looking for a hard right edge here, June 26th. Do we have a trade? Do we have an opportunity? Not with STX, no. Clearly here was your opportunity. You would have stayed in this big winner the entire time. I want to find you one that didn't work, because they don't all work, right? This is not a 100% guaranteed system where you're going to win every single time. So here with ANET, hard right edge, you're actually seeing a fresh pattern. You're seeing a fresh setup. There is your squeeze, right? Just a couple of days ago. And here is the release and the separation, the fanning out of those 3 EMAs. Now, I know that's happened a few times recently. First here when price first crossed above the 50, closed above it there. RT had been rising and hitting higher lows. The squeeze occurred back here on April 24th. The fanning out began here. The separation and the momentum of those 3 indicators began before price crossed above the 50 and closed above the 50. It did there on April 30th. There was your follow-through day. Probably got bounced out here. Look at the 5-day EMA closing below the 8 and the 13. The day after, at least intraday, you got follow through, so unfortunately you might have closed out there. And I know, again, you kind of got whipsawed a few times. So again, they don't all work. You have another opportunity here. I think this is a good one too because price is breaking out. It's hitting a new little intraday or short-term high there. It did so intraday and on a closing basis yesterday. It's up about 0.5% pre-market, so this is another opportunity. So we found a few just by simply doing the one-by-one method. Going through a list of stocks, applying the indicators, 50-day moving average, 5-day EMA, the 8-day EMA, the 13-day EMA, put volume on the bottom, and RT as well. Found a few doing it that way. There are faster methods as well. So if today's strategy sparked some ideas and you're curious about expanding your trading skills even more, stick around for another minute or so I can discuss a course on advanced moving average strategies and how you can apply those techniques to your own stocks or, again, to find new ones. The course is called Mastering Moving Averages, and it includes setups for momentum, reversals, and even sideways market, and it walks you through these trades step by step. You could see we'll touch on the EMA squeeze a little bit more. There is a short setup as well. As a student of this course, you get scans, guys. You get scans that will help you find trades even faster. The one-by-one method is great. You can do it. Takes a little bit of time, but these scans will really help speed up that process. Go to www.vectorvest.com/MA. Our class starts next week. You can see the sessions of our live classes that will begin. It is an on-demand course. All of the content is available inside the university, but we will be doing live sessions to review that content. Remember, if you took the all-access pass within the last year, you can join us live for these mastery sessions. The links to join will be in the course outline early next week. Thank you, folks. Hope you guys enjoyed tonight's special presentation, learned a little something, and we will see everybody again next week. Take care, folks.